Good afternoon, and welcome to the Cherry Bekaert webinar on 179D deductions and R&D tax credits. I'm your moderator, Scott Duda. I lead our professional services industry practice group, and I'm an audit partner in the Raleigh office. I've been working with professional services firms for 25 plus years, and architect and engineering firms in particular over that time frame. Professional services is the largest industry group within Cherry Bekaert, and A&E is the largest segment within professional services. So these are very important topics for the firm and for our clients. And we look forward to discussing both this deduction and this credit with you today. It's my pleasure to introduce Ron Wainwright, who I've been working with for over a decade in the Raleigh office. He leads our credits and accounting methods practice and will be educating us today on both this deduction and this credit. Ron?
Thank you, Scott. It's a pleasure to be with you today. And as Scott mentioned, I'm our national leader of credits and accounting methods. We serve in excess of 300 to 400 A&E firms when you think about credits, which we'll talk about today from an R&D perspective, as well as Section 179 energy efficiency deductions that are applicable to architecture and engineering firms. So let's get started. Scott?
Thanks, Ron. So here you see the agenda of what we'd like to cover today. We're going to start by talking about the 179D deduction. We're going to transition to R&D credits. We're going to focus specifically on A&E activities and what qualify for those. We're going to talk about R&D credits and the IRS, and then we're going to take it also to the state and state level if we have time. You know, really, when we think about what drove this topic in particular, it's been the conversations we've been having with our clients over the last 45 days. Tax planning has really ramped up. Folks are addressing ways to, or evaluating ways to address their taxable income from PPP forgiveness. They're thinking about a potential change in corporate tax rates going into 2021. And so these topics have been top of mind for a lot of our clients over the last 45 days, and we really wanted to get this information to you all before year end so that you can incorporate it into your tax planning as well. As we move through these slides, I will monitor our chat for questions, and when appropriate, I'll bring those to Ron to discuss. We hope to cover all of the questions that we get throughout the presentation. If for some reason we don't, we will both have our contact information at the end of the presentation, and we will also, if you will include your contact information in your question, we'll reach out directly to you. And so with that, we'll go ahead and get started talking about 179D.
Thank you, Scott. For those of you who hopefully are aware of 179 Cap D, it stands for the Energy Efficient Commercial Building Deduction. It actually came in the Internal Revenue Code as part of what is referred to as EPAC in 2005, which stands for the Energy Policy Act of 2005, which his initiative was to drive specifically architects and engineers to design more energy efficient buildings as well as systems with respect to their design work. Section 179 Cap D is in fact the tax deduction. Previously, it had expired at December 31st of 2017, but in a late extension of extenders in December of 2019, it was retroactively reinstated in the statute to January 1 of 2018, but unfortunately it expires again December 31st of 2020. What it stands for is an additional deduction attributable to the energy efficiency of a building based on the gross square footage. Specifically, it's a range from 0 to 60 cents per square foot of gross square footage, attributable to 3 segments of a building, specifically the heating and air conditioning, the lighting, and ultimately what's referred to as the building envelope. It is attributable to 2 types. So we have 179 Cap D deductions for building owners who directly own the building, but more importantly, as we'll talk for A&E firms, there is a potential to transfer the deduction to the designer of the energy efficiency system. When you think about 179 Cap D and its applicability to architecture and engineering firms, it's this transfer that drives a significant planning opportunity. And as Scott indicated, we have seen in the last 45 days a significant opportunity in our client base for these deductions to be taken into consideration. So what it stands for is a transfer to the developer and the architect that's involved in that design of the governmental building. In the case, or in this case, the deduction can be transferred to the primary designer of the energy efficient system. And that transfer is in fact tax-free from the governmental entity.
So Ron, we did have a couple questions come in already on 179D. The first is, what's the standard for determining if a building qualifies for 179D?
It's an excellent question. So originally in the Energy Policy Act of 2005, it was very intentional that the ASHRAE standard was set very low so that most energy efficiency designs would in fact qualify. Where we stand today is the ASHRAE standard 90.1 2007 is the standard. As you can imagine, most buildings designed and constructed between 2018 and 2020 will qualify, simply attributable to the requirements of receiving a certificate of occupancy.
So you bring up a good point about prior years, because our next question that came in was, how does a taxpayer claim a deduction for a building that was placed in service in prior years, say back in 2017 or 18?
Good question. So the deduction for a taxpayer-owned building in regards to the deduction is completed by filing a Form 3115, which is what is referred to as an accounting method change in the current year. So you can go backwards if you own the building, capture the benefit of the energy efficiency deduction, and bring that forward into the current taxable year. This ultimately eliminates having to amend those older returns, and the benefit of the deduction is absorbed in the current year tax return.
Okay, and then last question that we've got, what types of improvements qualify for this deduction?
It's a good question. So when you think about improvements to either a new building or an older building also will qualify for the deduction, we're talking about building improvements. So think about insulation, windows, doors, roofing materials, and as already outlined, lighting and HVAC systems. So in the renovation or in a new building, often you find energy efficiency around lighting, obviously being LED lighting, as it becomes more and more energy efficient. So let's talk about the type of buildings that will qualify, specifically when we think about the transfer of the deduction to an architectural and engineering firm. And we cited a few items here. So when you think about governmental buildings, military facilities, schools, K through 12, libraries, really any government-owned facility that is either at the federal level, the state level, or the local level. If you as an A&E firm are in that space designing for governmental entities, that is a very strong focus for you around 179 Cap D. When you think about residential dwellings with more than 3 stories, that's another opportunity. University-owned student housing and apartments is something that we see specifically in our practice. It does require certification by qualified engineers. And as we've already discussed, the certification is to the ASHRAE 90.1 2007 standard. If you are, to the prior question, in regards to a 179 Cap D transfer, so if you're looking to go backwards in time and you're not the owner of the building, you will need to amend your returns for that governmental building transfer. So here's an example of a client scenario that we've been involved with for some time, but we put asterisks on the 18, 19, and 20 year to show you that in the late 2019, 179 Cap D was reinstated. And so obviously they took advantage of 179 Cap D in the 12 through 17 years, but again, it expired in December 31st of 2017. But now this same A&E firm has looked backwards in time, given the retroactive reinstatement of the provision, and we have captured $503,000 of square footage that ultimately turned into a deduction for them of $474,000. 2019, we identified building square footage of $741,000 that turned into a deduction for them of $1,219,000. And then in 20, you can see the slide. So in total, this A&E firm since 2012, we've helped gain a transfer of deduction at no cost to the A&E firm of $7.8 million of a deduction to lower their tax liability across those years. So significant opportunity for A&E firms, specifically focused on 18, 19, and 20. As Scott said, in the last 45 days, we've been doing a lot of year-end planning. And we'll talk a little bit about a provision in CARE 3 that allows net operating losses to be carried back 5 years.
So Ron, before we go to R&D credits, I mentioned that I'm an auditor in my intro. And so I imagine that maybe folks on the webinar have questions similar to what I may have, but what type of government buildings would qualify for this 179D? Is it local government, universities? Is there any that would not qualify for that, or is it any and all?
Good question. It is any and all. It is a facility that just has to be owned by a U.S. government entity or a sub-entity, as it's often referred to. So really, any building owned by a local, state, or federal government qualifies. And again, it could be a local elementary school, local college, a state government office building, or a federal military complex.
Okay, good. And then we had two questions come in from attendees. One, our firm designs buildings and uses a number of subcontractors. How do we determine which designer gets the 179D deduction?
Great question, because we see this all the time in our practice where there is a group of architectural firms that may be designing a very large facility. So the building owner has the authority, being the government entity, to determine the allocation amongst the various designers. Some states, for example, such as North Carolina, have very well-defined procedures for making this determination at the governmental level. And will frequently look to the official documents, such as the stamp drawings and contract language, to ultimately determine who the primary designer is. The actual provision states that the 179 Cap D deduction is earned or is attributable to the designer of the energy efficiency system on record. However, other jurisdictions will look to CPA firms assisting the A&E firm in the transfer of that 179 Cap D deduction to determine. So it's a state by state as well as a federal agency determination. But great question.
And then we had another come in, and I think that you mentioned this earlier, but how would we claim this deduction for a year that was already filed? And I think you had mentioned earlier that there was a tax form that could be filed that would assist with that, if I recall.
Well, actually, good clarification question. So if you are the owner of the building, so really not applicable to A&E firms, you can file the form 3115 because you are the owner of the building. However, when we think about architectural firms that have done work in the 18, 17 year no, the most recent 19 year, you actually have to go back and file an amended return at the entity level, the A&E firm's level, to capture that transfer. Because ultimately the transfer of the deduction in the A&E space is tied to the year in which the governmental building was placed in service. There is a limit to the ability to file amended returns underneath the statute of limitations in the Internal Revenue Code, or what is often referred to as open tax years, which generally means that the returns would need to be filed for the prior 3 years or as long as that statute is open. But good clarifying question.
So if I'm understanding, there's a difference between owning the building or doing the work for the owner of the building, and one is amended and one is that change in accounting method.
That is correct.
Got it. Okay. Great. Thank you. Okay.
So let's move on to another area that is very applicable to architect and engineering firms, the research and development tax credit. As I mentioned, 179 Cap D has been in the statute since 2005 underneath the Energy Policy Act of 2005. But when we think about the R&D tax credit, it's been in the statute since 1981. So it has a long life and a long history. So let's really talk about what is the R&D tax credit dating back to 1981 and what it stands for. So specifically, the R&D credit is a federal tax incentive. It's now available since 1981. 40 plus states have adopted the research and development credit, but it's been designed to promote innovation, and it allows companies, or in this case, A&E firms, to receive tax credits for expenses that were incurred in research and development. Specifically, it's primarily a labor-based incentive, which means the credit works off the wages of a taxpayer. So in an A&E firm, we're going to be looking at those architects and engineers with respect to the type of design work they're doing, because clearly they're designing and they're promoting innovations in the context of the facilities they're designing. So it applies to the A&E activities to develop new or improved and more reliable designs. The product for an A&E firm, of course, are the drawings. The processes of how you design are continuously changing. And in turn, the techniques that you utilize to design that ultimate facility change consistently. So often the R&D credit has myths around it. We'd like to try and kind of quash some of those myths. It's not about a eureka moment. There's no lab coat required. And it's ultimately not just for the space shuttle. It's also, there's really no discovery test. So each building that you're designing is very different, whether it's the technical specifications of the ultimate owner of the building or how you go about designing it. So let's think about some qualifying industries and examples. And here is just a few that qualify. But today, of course, we want to talk about specifically architects and engineering and how that could qualify from the standpoint of the R&D credit. There is a 4-part test in the statute when we think about innovation and design work. And the tests are as follows. It's first of all, there had to be a process of experimentation. So as you design a facility, as you're designing a building, you're going through a process of experimentation because you are considering one or more alternatives. When we think about what's called the technical uncertainty test, it's really defined as capability, method, and process. So of course, when the design work, there's always a question around the design from the process perspective and the design around the technical specifications or the capability side. The technological in nature test actually means that the R&D effort by the Internal Revenue Code must be founded in a hard science. So a hard science, of course, is engineering. And when we think about A&E firms and the design work they're doing, that encompasses engineering. And I guess the permitted purpose test is that the effort is intended to, obviously, in a product or a business component setting, create a new design that's probably never been done before, or at least utilize prior knowledge to design that facility based on those technical specifications. So a little bit more granular, when you think about the permitted purpose, deals with the performance, the reliability, the quality of the ultimate product, i.e. the design and the blueprints. Technical in nature deals with engineering, as I mentioned, and the technical uncertainty is that there was a capability, method, or appropriate design process to it. There was a question at the beginning of the design. And then again, the process of experimentation is to evaluate one or more alternatives to resolve these uncertainties that you find in the technical uncertainty aspect. So a little bit more information on that 4-part test. When we think about, I'll say, qualified services, and specifically how we go about evaluating the wage side. So a A&E individual that is conducting R&D is in fact the one who is ultimately directly performing those R&D activities, developing the design specifications, testing the design concepts, the modeling to resolve design failures and issues, the kind of key architect or the key architectural team. However, what is often overlooked is those A&E professionals in larger firms that are in the supervision area. So they're reviewing those technical designs. They're communicating revisions based on requirements of the ultimate client. And then ultimately you can qualify direct support individuals. So individuals that might be compiling data and documentation results and also creating potentially models around the design work. So when you think about the wage and predominantly a labor subsidy, think about it's just not the architect and engineer that's designing or conducting the R&D, but it's that team of individuals that are supervising as well as supporting. Some excluded activities that we just want to highlight is that foreign research. So if you happen to be doing work abroad, when you think about the design work and you actually travel to that country, that would not qualify. Reverse engineering, if you will, does not qualify. An undefined term. If you're doing market research or efficiency surveys, not likely to qualify. So really the broad brush here is that really anything that is adapting an existing process is likely not to qualify, but we find that rarely in A&E firms. There's also a concept called funded research, which ultimately means that if you are being paid for the effort, that means it's been funded, and if you are retaining the substantial rights, so it's called you must be at economic risk and you must retain the substantial rights. So here's an example, and I always like to point this out in the A&E. So, when you think about an owner and an architect, owners, when you think about funded research, we will avoid the statute's requirements because ultimately you bear risk of loss and you are retaining the rights to the drawings. If it's a fixed fee engagement, you have economic risk, and ultimately you retain the rights and a license to the owner of that document. When you think about another provision in AIA docs, you think about fixed fees on the consulting side and paid and when paid. So even though you may have a contract where you believe that you're receiving compensation and it would be deemed to be funded, the provision specifically in AIA documentation, general contracts tell us that in fact you are at economic risk, and in fact that you do retain the substantial rights to your product or your blueprints specifically. So just to cover that funded research. Again, when you think about the cost that we're looking at to ultimately claim the credit, we look at wages, again, predominantly a labor-based subsidy. So we look at W-2 Box 1 wages of the individuals. We look at time tracking reports of how an architect or an engineer is spending their time on a specific project. And we look at what's referred to as activity time analysis to determine the percentage of that individual's time across qualified research activities. When we think about supplies being consumed, that's another area of cost that we look at. And we look at the account detail of what's happening in that design work. So as you go through maybe multiple models until you ultimately get to the end product or the design, those can be deemed to be supplies consumed. And then if you happen to subcontract, you look at an engineering firm, and so you might be subcontracting to assist you in the design work, that will qualify as what's referred to as a qualified research expense. And then ultimately, what's referred to as RELOC, or really rental and lease cost of computers. If you're doing design work and the design work is in the cloud, those cloud hosting fees, that off-the premise hardware that is being used in the cloud, so that cost will be eligible as a qualified research expense. Ultimately, the question becomes, how much is the credit? Because remember, it's a dollar for dollar offset against the tax liability. So the credit very much differs from the 179 Cap D deduction in that it's an actual dollar for dollar offset against the tax liability or against the taxes paid by the architectural and engineering firm. It can range from 6% up to 14% for every dollar identified. And so it is likely that you as an A&E firm have been engaged in qualifying activities for the last several years. And you are eligible to go back in time, very similar to 179 Cap D, amend your returns, and then retroactively claim the credit, and then, of course, receive refunds attributable to prior year tax liability. If you don't fully utilize, because the credit is so substantial against your tax liability, the R&D credit can be carried back 1 year and ultimately 20 years from the standpoint of minimizing that tax liability.
So Ron, we've had a couple of questions come in on this credit. The first, how much, or how do we determine how much of the credit we are eligible for?
Good question. So when we think about the R&D tax credit, it is a federal subsidy from the standpoint we're getting to use that dollar of wage and deduct it to derive taxable income. And then we use that same dollar of wage to calculate a federal credit as well as a state credit. So an R&D tax credit study is required. And the study, in essence, identifies all the activities that meet the government requirements, that 4-part test. And once those activities are determined, then we associate the costs that have been incurred across those buckets of cost being wages and supplies consumed and third-party contractor costs and computers. And we associate those costs to the activities. Then we apply 2 different methodologies, and the taxpayer is eligible to claim the methodology being the regular or alternative simplified credit method, which we gave you the ranges on, to ultimately generate a credit to be offset dollar for dollar. Typically, A&E firms, the main driver of the credit, as you might imagine, is the time of the architects and the engineers. That's where the largest qualified research expenses are going to be.
Okay, and then another question. Is there a specific way we claim the benefit of the credit?
Good question. So yes, the credit is actually claimed on a form 6765 on the A&E firm's tax return. The credit will reduce, again, dollar for dollar, the liability of the A&E firm. Credits claimed in prior years, again, caused by amending, but the form 6765 is the actual form that is put into the A&E firm's tax return to minimize the tax liability to the owners of the A&E firm.
Great, thank you.
Great questions. So let's think about A&E firms specifically. What are types of activities that could and will and likely will qualify? So your systematic design processes from start to finish are going to be an activity that qualifies. Ultimately, your project-based time tracking, your task and subtask around that design will meet the standard of what I referred to as activity time analysis. Your organized electronic document management systems are going to qualify from a technology perspective. And you, as an A&E firm, are likely consistently evaluating the technologies in your design approaches. And so that will qualify. Project also go around alternative designs and technical concept. So let's kind of drill into those process and tracking by specific types of activities. So think about it when we say conceptual design moves on to feasibility design, moves on to site plan approval packages and processes, which moves to schematic, and then ultimately the design development, the construction documentation, and then the construction administration. So again, very specific processes that every A&E firm has attributable to their design work, and more specifically in regards to construction documentation and the electronic records that are maintained. Types of activities generally, when you think about the granularity of that 4-part test, is going to be attributable to the energy efficiency that you're designing in that building. And so yes, you can receive not only the 179 Cap D deduction transfer, but you could also claim an R&D credit for the design work on governmental buildings. When you think about BIMs, it's referred to as building information modeling and CAD modeling, that's going to be an activity that generally will qualify. The schematic design and development we talked about. First of its kind projects, for the municipality, for the firm, et cetera, is going to qualify. Designs that you may be considering alternative materials and you're consistently evaluating as part of the design, well, what is the material that will be ultimately utilized to build the building? That is another area of general activities. And then obviously, structural design and alternative structural designs is an activity that's going to qualify across that 4-part test.
And we had a question come in. If you could provide some specific activities that would qualify where you've seen them in A&E firms considering the R&D credit. So maybe you could give some insight into the things that we've seen.
Great question. So again, evaluating new materials in a trial and error sense to determine strength, load or load cycling, tension, weatherability, and durability is a specific example. We see a lot of developing new methods of installation or construction in the design work to ultimately improve the quality or the efficiency of the ultimate structure. You're looking at technical issues as you deal with that installation and construction. Designing and developing new components of the building, maybe first of its kind, or a free hanging mezzanine is an example that we've seen recently. Any unique building design that ultimately improves that building performance as it relates to the efficiency of flow through of people or the reliability in regards to the ultimate underlying structure. Those are just a few examples of what we have seen recently.
Okay, and we had another. I spend all of my time designing new buildings for clients. Does all of my time qualify for R&D?
Good question. So not necessarily. The activities, as we've covered, must meet that governmental definition, that 4-part test of qualifying research activities. As we mentioned, this is known as the 4-part test, and it involves those 4 unique separate tests. What I would say to you is all of your time may not qualify, but what we find in A&E firms is the majority of your time will qualify when you think back across what we covered from the standpoint of the type of activities that generally qualify. So great question. Not necessarily all your time, but in our practice, we find the majority of A&E time, specifically when you take into consideration the supervision, the support, and ultimately the direct A&E team or the architect and engineer that's working specifically on that design of that building or buildings, plural.
Mhm. Good. Okay. Thank you.
So this is an area that we did not want to spend a lot of time, but we wanted to make you aware of. So we often get the question in the A&E environment around, well, this is phenomenal. We've not taken advantage of the R&D tax credit. How much scrutiny is ultimately applied, not just to A&E firms, but really around the R&D credit? The first thing I would answer is, remember that it's been in the statute since 1981. Accordingly, based on a 2018 IRS data book, the examination rates are very low. Overall, the rate of R&D credit across all industries is about 0.5%. Corporations is a little bit less than 1% at 0.09, and pass-through entities is about 0.02. A lot of that is attributable to the fact that it's been in the statute since 1981, and in fact was made permanent in the statute in 2017. There are two areas of examinations. This is standard. So you have large business and international examinations, which means the taxpayer's assets are in excess of 10 million. And then you have small business and self-employed examinations, which means that it's less than 10 million of assets at the entity level. As you might imagine, because of what we discussed, there are significant resources that are required from the IRS perspective for R&D audits, which really speaks to why the overall examination rate is low. There are numerous initiatives I would mention that are focused on different areas to improve audits. But when we think about IRS scrutiny of the R&D credit, generally it is very low, and I would say the same with respect to A&E firms. Again, there are very specific focus areas in the event of an examination. I just highlighted a few here. When you think about the large business and international initiatives, and again, that's across all industries, there's really a focus on what's referred to as the record keeping, and then those larger A&E firms could have an engineer assigned to the exam. When you think about the small businesses that less than 10 million, there's really an East, a Midwest, and a West team. But again, not heavily scrutinized because it's been in the statute for so long. What you would find in the event of an exam is potentially a single agent in the smaller exams. The large exams, you may have one or two agents. That is a more collaborative process based upon our client representation. And so ultimately, those larger A&E firms could see recurring audits more likely. Smaller firms, recurring audits, not as likely, as I said here. Again, here's some of the typical focus areas, but that's the importance of completing an R&D credit study, thinking about the base period, thinking about estimates of potential time, but in an A&E firm, time tracking system is important. That connection of a cost incurred to a specific qualified research activity. So here's some of the areas that are kind of typical focus areas. As I mentioned, there's 40 plus states, and we wanted to make sure we highlighted that for you, depending upon where you as an A&E firm are. Here's some examples of how the 40 plus states have really begun to utilize the state level credit almost as an economic tool. So Virginia, as an example, has a refundable credit. Yes, the Virginia Department of Revenue will write the A&E firm a check back if that is requested. There's a major credit for companies that have more than 5 million of qualified research expenses. Less than 5 million, you find yourselves in what's called the minor pool. But it's a allocation state, but again, a refundable credit, cash check, unless you choose to use it against the tax liability. Going a little bit more northeast, When you think about the New York credit, it's what's referred to as the Excessler research and development credit. It's a credit of 50% of the fee of the federal research and development credit, up to about 3% of the qualified research expenses in New York State. So what we find is states modify the credit to determine how they want to use it, almost as an economic development tool. This is an example more northeast again, up in New Jersey. But in New Jersey, I wanted to highlight this because you can actually sell the unused R&D credit to unrelated profitable corporations. You cannot do that at the federal level. And you'll see here their carry forward is different than the 20 years. It's a 7 or 15-year carry forward, depending on the type of industry that is the R&D is being generated. And then going back to a state in the Southeast that has a refundable credit, Maryland. So you can begin to see the economic development tool here. Basic credit's about 3%. They have a growth credit that can be up to 10% of the QREs. And again, refundable for small businesses. The interesting thing about this I wanted to point out is that you can actually make application for the refundable credit until November 15th of the year following the taxable year. So that November 15th date is actually after the filing of the prior year return. So a lot of states, 40 plus, Florida being the most recent, have adopted the federal R&D credit. So let us mention how our projects work specifically. The first thing we do is we will complimentary scope the opportunity for you. So there's no downside to having us take a look or a review or a scope of your activities and in turn expenses and what's the magnitude of that credit over the past 3 years or the current year. So we identify subject matter experts and talk to them about the type of R&D activities that are occurring. We ensure that we qualify or we make sure that the activity that we've identified passes that 4-part or a 7-part test that we did not discuss. And then ultimately we quantify the R&D credit. And in our complementary scopes, we will actually outline how you would utilize and monetize the credit historically, and then of course prospectively. And then on our R&D deliverables, we deliver our audit-ready deliverable. What we mean by that is that we stand behind our work and we actually include in our deliverables the audit technique guideline answered, fully completed, and cross-referenced into our work papers from that standpoint. So I'm going to turn it back to Scott, and I want to thank you for the opportunity to talk and chat today. I hope this has been informational, educational, and we'd love, if we're not already working with you, to have the opportunity to work with you. Scott?
Thanks, Ron. We mentioned IRS audits and the chat questions slowed considerably, so I'll give folks another minute or so here to put any questions in that they may have for us. And what I would say is I appreciate the opportunity to bring this information to you. Thank you all for spending your afternoon with us. Ron, thank you very much for sharing your expertise with us as well. You see our contact information here. If you have questions following the webinar, please feel free to reach out, let us know, and we'll be happy to talk to you about your specific situation in detail. I don't see any further questions coming through. So again, hope you all have a great afternoon and great weekend, and appreciate your time today. Thanks.